Hey everyone, welcome back to Corporate Decoder, the place where we untangle corporate filing so you don't have to. Today we're diving into Lincoln National Corporation's proxy statement. Think of a proxy statement as a company's instruction manual for its shareholders meeting, but with a lot of extra details that can tell us a lot more than what's on the surface. Are we about to uncover some executive shenanigans? Maybe some hidden risks? There's only one way to find out. This isn't just a snooze fest of legal jargon, it's a blueprint of where Lincoln National is headed, how they plan to get there, and how much they're paying the people steering the ship. We'll break down the key votes, the board nominees, and get a good look at how the company performed over the last year. First up, let's talk about who's running the show. We've got 10 nominees for the board of directors. It's a pretty diverse group in terms of skills. There are lots of people with financial services, insurance, and business operations experience on the board. That kind of makes sense, right? It's an insurance company. It is important to note that Janet Liang resigned from the board and Lynn Utter will not be standing for re-election. The board elected James Morris to take one of their places. The company makes sure to also note diversity among the board. You'll see a roughly even number of women and men, and almost half the board is ethnically or racially diverse. It's worth pointing out here that the lead independent director is William Cunningham, who's been on the board since 2006. He helps keep things in check. Now let's get into the nitty-gritty. How did Lincoln National actually do in 2024? The company is organized around three key goals. Build a strong capital foundation, optimize their operating model, and deliver profitable growth. They sold their wealth management business, netting a cool $650 million. Group protection business is booming, the annuities business grew, and retirement plan services saw a huge increase in sales. Life insurance sales dropped because they shifted to higher returns on less volume, but that's part of their plan. It's not all about the bottom line though. Lincoln National is keen to show off its commitment to sustainability. They're members of the UN Principles for Responsible Investing and are working to reduce their greenhouse gas emissions. It's the kind of thing investors are looking for more and more these days. A big part of any proxy statement is executive compensation. Lincoln National says they want to pay for performance, motivate executives, and attract top talent. But how does that translate into actual paychecks? This proxy mentions that 91% of the CEO's pay and 80% of the other top execs' pay is variable based on performance. That means a lot of their money is at risk. If the company does well, they get paid well. If it doesn't, they don't. The incentive compensation plan is designed to encourage building a strong capital foundation, increasing operational efficiency, and delivering profitable growth. The annual incentive program paid out above target, but all of the long-term stock awards paid out at 0%. That is quite a combination. They have robust stock ownership guidelines. They use an independent compensation consultant. They are doing a lot of the best practices that are in fashion with shareholders these days. Moving on, we have some details on the compensation for the board of directors. A big number to take note of is $350,000, which is what the lead independent director, William Cunningham, is paid. Board members also have to have stock in the company. One thing that always catches my eye is the payment to the independent registered public accounting firm. Ernst & Young billed the company about $14.5 million. Almost all of that was audit fees. It is up for a vote to reappoint the firm, and you'll need to determine if you want to approve the reappointment. The proxy has an advisory proposal on executive compensation, basically a vote on how well the top execs are getting paid. This year, they are asking you to approve the compensation, and this section details how the board thinks that the NEO should get paid and what the philosophy behind it all is. If we scroll back to the executive summary, we can see a quick comparison of how the CEO's target comp and realized comp are related. The actual realized compensation was only 61% of her target opportunity. In 2024, the committee changed the long-term pay mix beginning with awards granted in 2020. Of her board thinks that NEO should get paid and what the philosophy behind it all is. If we scroll back to the executive summary, we can see a quick comparison of how the CEO's target comp and realized comp are related. The actual realized compensation was only 61% of her target opportunity. In 2024, the committee changed the long-term pay mix beginning with awards granted in 2024 and discontinued using options and focused primarily on RSUs. They are still measuring. Here's a summary on why each form of compensation is important in their own words. Base salary rewards sustained high levels of performance. The annual incentive program is based on the business results, and the long-term incentive program rewards growing shareholder equity. How do they make sure they are competitive? Lincoln National uses something called the Willis Towers Watson 2023 Diversified Insurance Study of Executive Compensation. They look at companies like Aflac, Bright House Financial, MetLife, and Prudential Financial, among others. This allows them to benchmark and see where they stack up against similar firms. What were the 2024 priorities? It looks like a successful development of the new Lincoln Financial brand and marketing strategy, continued transformation of life insurance business, and continued progress on organizational transformation efforts. All right, let's check out that summary compensation table. This table is basically a ledger of what the top executives took home. The important names here are CEO Ellen Cooper at around $15.9 million and CFO Christopher Nexipor at around $6.1 million. This amount might seem like a lot. It comes from a combination of base salaries, stock awards, and incentive pay. But remember, a big chunk of it is tied to how well the company performs. What happens if things go south though? This section outlines potential payouts in case of termination or a change in control. In a change of control, for example, if executives get terminated, they could be entitled to a large payout of cash and continue to vest into previously awarded stocks. Change of control payments include about 3 years of compensation. In particular, look at what would be paid to Grove, who is an executive vice president. Here we are, this is the big item for the shareholders. There's a shareholder proposal on the table to require that the chairman of the board be an independent director. The board currently doesn't support it. The board wants to keep flexibility, and they already have a lead independent director, William Cunningham, to provide oversight. The board thinks it needs flexibility in order to keep the business running smoothly. A lot of shareholders support this proposal. Last but not least, shareholders are being asked to approve an amendment to the Lincoln National Corporation 2020 Incentive Compensation Plan. It has to do with the number of shares available and the maximum cash someone can earn. Shareholders are being asked to give them an additional 1,750,000 shares under the 2020 Incentive Plan, which would mean 10.8% dilution, a decrease in the amount of share. The idea is that this will help them attract and retain talent and stay competitive. Another thing is to increase the maximum cash amount of an incentive someone can earn to 1 fractionals of devolution. A decrease in the amount of share. The idea is that this will help them attract and retain talent and stay competitive. Another thing is to increase the maximum cash amount of an incentive someone can earn to $12 million. Now, stepping back and looking at the big picture. Here's my take. Lincoln National is at a point where smart leadership will make or break them. On the one hand, their diversified business and focus on capital and operating model looks promising, and investors certainly have noticed. On the other hand, a substantial chunk of their executives' compensation hinges on maintaining those high numbers. If those numbers don't materialize, their stock may take a further hit. Ultimately, Lincoln National is a company in transition. They're making some smart moves. But the challenges are significant. Whether they can continue their financial momentum to retain key people and keep the ship sailing smoothly and deliver consistent long-term results is still an open question. Alright, that's it for this corporate decoder. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more deep dives into the world of corporate filings. Until next time.